Vikas, it's interesting that we're meeting right now because of late, with all the ongoings with the Adani saga and a lot of other things, as to how a lot of global commentators as well have been watching this entire episode play out. Is there a doubt on the India story at all? I mean, do you get questions and queries sitting out there in Singapore regarding what's going on with the Adani names?
Yes. So that's part of the reason I'm here, because a couple of weeks ago I started getting questions like the ones I got last summer and autumn. Last year was, is China investable? Are you allocating more money to China? 2 weeks ago it was, is India investable? Is the India Inc. story dented? Are you allocating more money to India?
And how do you answer that then?
Well, so I'm here to answer those questions. And when I start getting questions like that, it gives me a signal that I should be doing the opposite of what others are saying. And as I mentioned, our allocation of capital to India has never been higher. Our cash levels have never been lower. And so I also think the opportunity set in India has never been broader, it's never been deeper. When I was here, last time I was here in the studio was 11 years ago. At the time, if I share some numbers, so Reliance, HDFC, TCS, and Unilever, aggregate market cap was about $200 billion. Just those four companies, the aggregate market cap today is $500 billion, in local currency terms even higher. When we look at how the Indian GDP will grow, how the story will play out over the next 11 years, 12 years, those numbers will repeat themselves across sectors again and again and again. And so we're very excited about this market. There's no kink in the India Inc. story.
So suffice to say that you've been a buyer, bought more of the same, added more positions in the recent underperformance or the decline in India?
Yes, across key sectors. So I think there's a guess just on, if we start with healthcare, for example. I think the Indian healthcare story is intact, very strong. If you look at hospitals, services, some pockets of biotech and pharma, I agree with the view on diagnostics. If you look at IT services, the larger companies, it's not as bad as people think. If you listen to the commentary, if you look at the numbers, revenues are healthier than people thought. Margins are higher than people thought they would be. Banks is one area where we prefer some of the smaller and middle-sized ones, specialty finance, housing finance, not so much the big banks. The scale is such, you have to be more careful. Autos have surprised me, four-wheeler and now two-wheelers. I think those are fertile grounds for long-term investors. We can keep going, there's a lot to talk about.
Yeah.
But I think the point is that if you look over the past 2 decades, there have been so many episodes where you have gotten these questions, I have gotten these questions. If you think about May 2004, May 2009, when the election results were surprising. 2013, the summer, yield curve inverting, currency blowing out, same questions. Global financial crisis, COVID. But the market endures because the earnings growth story is so strong. There are other markets where there's a short-term trade. This is not one of them. This is perhaps the longest dated trade in the world when it comes to equities, and we're here to be a part of that.
It's interesting that you say IT is not as bad, so clearly you're not concerned about US recession. You feel that that's going to only spell more business for India services?
I think it's fair to say we were more concerned about that 12 to 15 months ago than we are today, and the portfolio is positioned for that. Also, the prices reflect that. So if you look at the starting point today compared to the end of calendar 21, the starting point is so different. And there's a lot, what we're trying to judge always is what is in the price and how do we allocate our capital to maximize prospective returns. You look at IT services over the past 15 months or so, and a lot of those concerns are in the price. Now you start looking at the numbers, and relative to expectations of just 3 to 5 months ago, the earnings delivery has actually been quite positive across the sector and concentrated on the larger ones.
What intrigues me, on the other hand, is, and sorry to jump to not what you don't like, private banks. What makes you so wary of private banks?
I think it's less an absolute concern about the banks, more just a relative positioning and where the relative returns are. So I think if you look at the size of the loan books and the growth that is priced in for them, in percentage terms, these numbers are high, but in absolute terms, it's so large. So where we see better opportunities, not that we don't have good opportunities, we have good opportunities. Where we see more and better opportunities are in some of the smaller companies, housing finance. If we look at housing finance for the lower and middle income groups, I know there are some sectors in consumer discretionary, consumer staples, where if you're exposed to the mass market, there's some concerns, and we can talk about that. But in housing finance, I think that's a very long-term story for growth, and we have our capital there.
Well, how can you be bullish on India and not bet on the big banks, right?
Yes. So it's more a relative bet. So if we look at the aggregate exposure in the big banks that we have today, relative to the rest of the portfolio, it's a little bit smaller, but it's still quite overweight. So we still like them, but we like other things more than we did a few
More the
months back.
corporate-facing banks?
More the corporate-facing banks, yes.
Okay.